Hello and good evening, traders. Welcome to this midweek chart update. The chart of the week is EURAUD that we'll be looking at tonight. All right, so as usual, we'll go to the historical exchange rates. All right, so this is, I've already selected euro here. That's euro versus the Audi. If we just show that with a blue color, so you can see this is FX top, the historical data chart. This helps you to look the market in its entirety. Overall, you get an overall view of the cycle of the market. So you need to understand where you are in the cycle, in the market cycle, to be able to know which wave you're in and how to trade the waves. So I've got euro, I've got Audi historical data chart that is from 1st of January 1953 up until today. So that chart is what I've got on the screen. That is all the data that is available on this chart. As you can see there, that is his EURAUD. So what do you see there? So what we see here on this chart is that from the 1950s, it was flat, and then it started this impulsive move down. But this move did not end here, did not end here. It ended here. So this was the last swing high, swing low and the swing high. What happened after that swing high? This is a big move to the upside, started in the 1975, mid-70s, up until 2009. So after that, you get a big corrective move. But you see that this corrective move is starting with an impulse. Okay, so if that is starting in with an impulse, you're still expecting that you're going to get a correction here. So we'll be looking for something like this here. I'm going to use purple this time. Let me use bright purple, or rather pink. So I'll be anticipating something like this one. So undo that. That's one. That's two. Okay, my mouse keeps cutting off. Let's undo again. All right, so we've got one, two. We're looking for these three here. Okay, we're looking for these three. So this is where we are in the cycle of the market. So why are we looking for this to look like that? It's because you've got an impulsive move. So this could be an A move. This could be a B move. And in here, you can see here you had what looks like an expanding flat. But when we go into the chart itself, we're going to see whether this qualifies to be an expanding flat. So we've got this expanding flat, and then now we're getting this move to the upside. But the question is whether this, we're going to discuss this one on the chart, whether this is going to break here and move on to give us this 1, 2, 3 zigzag before we get a move down. So this is the move down that we'll be looking for. Look at the arrow. So you can see impulsive move down in red, correction in red. Now we're looking for this move to the downside now in red. So let's go to the real chart and see what we're looking for here. So we're not going to worry about all of these here. Right, this is the left-hand side of the chart, so it doesn't really matter. This is basically hindsight. So what separates real traders from the rest is the right-hand side of the chart, who can speculate with better accuracy what's going to happen with the next market move. That's what makes traders. But obviously, that's just one of the many things. All right, so let's look at the chart itself, EURAUD. I'm going to clear everything. We're looking at it on the trading view now. Let's go higher time frame, weekly. Okay, let's look at the weekly. So you can see that impulsive move that we're speaking about. So now, Elliot waivers, you've done the theory, you've learned, you've got a chart like that. What do you see? What do you see there? What I'm seeing here is a big parabolic move to the downside. Okay, after that, I'm getting this 1, 2, 3, and I'm expecting this third correction. So that will be like your A, B, C. All right, so we're just looking at it like this. But then if you look at this, I'm gonna undo this. If you look at this, you will see that that A is not supposed to end there. There's a clear wave count there that you can have. You've got me. I'm going to take this out and just make the screen a little bit bigger so we can have the whole chart on the screen. So that's your weekly. What do we see there? We see a big impulsive move down, and it starts with a correction. If you want, you can label all of this, but it's really not necessarily. It's really not necessary. It's not going to help you with anything. So what do you see? We've got one, we've got one, we've got two. We've got one in a different degree. We've got one, we've got two. We've got three, we've got four. We've got five. I'm sure most of you have not seen me doing impulsive counts. 1, 2, 3, 4, 5. It's mostly three waves. So you label the right way. Whatever it is, if it's three waves, you label it three waves. If it's five waves, you label it five waves. If it's double corrections, you label it double correction. All right. So what I'm seeing here is impulsive 1, 2, 3, 4, 5. So this one completes this internal one. So this means that this will then be my 4. So if this is my 4, this will be my 5. Okay, so this is higher degree. This is my 4. So internally, you can see here we've got A, impulsive move A, B, C. This is correcting this one in red. So we've got 1, 2, 3, 4, 5, A, B, C in the lower degree. Higher degree, you've got a 1, you've got a 2, you've got 3, you've got a 4, you've got a 5. What are you anticipating? A, B, C. So this one is coming down as an A. And then you could have I need to change the degree. Need to stick to the 5th degree, to the yellow one. Possibly an A, B, C like that. Before we go down. See. All right, so you can see here what I've done here is just to show the structure before anything else here. So what we will have is a 1. So this impulsive move goes all the way because that's your 5th wave there. Okay, so if that is your 5th wave, I just need to take that one at the bottom off. If that is your 5th wave, then we need to get an A. Then C. All right, so what do we have? What have we done here? We have done impulse 1, 2, 3. So what is that 1, 2, 3? It's a 3-wave move. So we call this one A. This A now is higher than the yellow. This is a B. This is a C. Okay, so we've established the direction in the lower in the higher degree. So all we need to do now is establish the direction in the lower degree. So what are we looking at? We've got now 1, 2. Remember, the red is already corrected with the ABC in red, but the yellow still needs to be corrected as well. So let's look at the yellow. So the yellow is this one: 1, 2, 3, 4, 5. A, as you can see here, same degree. B, so the degrees must go together. C. Every degree has got its own correction. So we've got 1, 2, 3, 4, 5, A, B, C. Red, 1, 2, 3, 4, 5, A, B, C. So similarly here, you may want to put in the labelings on this one, but it's too cluttered here to label it on the weekly chart. You need to go downgrade the time frame and label it lower. So what are we anticipating here? We're anticipating that we're going to have a move like this here. So we already have this move, and I'm going to do it in the lower degree green. We already have 1, 2, 3 waves, but we need to get to C. Okay, we need to get to C. So if we need to get to C, we need to get a 1, then a 2, and then a 3 to get another 3-wave move up to complete. So this will give us WXY to complete that move. So essentially, either 3 waves or an impulsive 5-wave like this one. So we need to monitor it. So for now, we are here. So this is what we have established so far, that we are in this correction here. So we're going to go straight into that correction now, and I'm going to clear everything. You can take a snapshot of this. Okay, we're going to the daily. All right, so that is that last move that we're looking at here now. Okay, if I just label it a bit, I'm going to label it a bit more. This last swing, this was your 5, if you remember. We are now a little bit closer. We've zoomed in into the lower time frame, onto the daily. That was your 5, this was your A, this was your B, and this was your C. Okay, so if that was your C, on the weekly you noticed that we could not label the internals of this. It was too cluttered. So if we've got 1, 2, 3, 4, 5, A, B, C. Okay, and then higher than the 5, we had our bigger A. I'm out of space here. We had our bigger A, we've got our bigger B, we've got our bigger C that we want to complete over there. All right, so now, that's your A, that's your B, that's your C. You'll notice something here. I'm going to show you a trade that we took based on this. You see here, you've got what looks like a diagonal. A diagonal in wave C. This is a clear ending diagonal within a wave C. If you've read your theory, you know that a diagonal happens either in wave 1 or 5 or C. But it depends the type that you have. If it's on wave 1, it's a leading diagonal. If it's on wave A, it's a leading diagonal. Wave 5 and C are ending diagonals. So what do we have? How do we label this diagonal? We've got a B there, we've got a 1, we've got a 2, we've got a 3, we've got a 4, and then we've got a 5. You see this 5 pushes through the trend line. That's what we expect. According to the theory, if you've read correctly, you know that wave 5 normally overshoots between 1 and 3, and that only happens with a diagonal. It does not happen on a triangle. I've seen people saying a triangle overshoots and all those kind of things. That is not correct. That is not applying the theory correctly. You don't get an overshoot or an undershoot on a triangle. You only got an overshoot on a diagonal. So make sure when you read the theory, you read it right. So you'll see that this diagonal complies with all the rules. So 1, 2, 3. You've got 1, 2, 3 for wave 3. Remember, diagonal, you can have 3 waves within wave 3. 1, 2, 3. See, this one checks all the boxes. So when this was coming down here for wave 5 in red, we were ready to buy this. We were ready to buy this. And I'll show you when we bought. I'll show you a trade that I posted here on TradingView about a year and a half ago, buying this whole move. Okay. So this is where we were. So if this was 1, 2, 3, 4, 5, so this means that this degree here now is another 1, 2, actually A, B, C. And you can see that this move is not complete, so the sequence is not complete. So this ABC can be a W, a X, a bigger X now, a deeper one. So we would have a 1, a 2, a 3. That's your X. So where are we now? We are within this one. So what is the degree now here? The degree will be possibly a WXY. So we are in the red X now. So we will be looking for a move to the downside to complete this before we go up to wave C. It's clear like that. Clear. So you can see here we are in this correction. But remember, this is a daily correction. So within the daily correction, we can find trades within the 4 hour. All right. So if we wanted to label this lower and lower, we can still do that as well. All right. So let's clear that and now go into this WX. Unfortunately, I'm going to get everything off and I'm going to switch on my labeling. So I've got all that labeling here. So this is what you guys don't see during my weekly outlook. You don't see all this labeling. So you just see the analysis where I'm showing you the structures. But there is an overall sequence. This chart is not just a part of one swing. You can see here it's labeled. The whole sequence from 1953 is labeled. All right, so let's go to the 4 hour. We're now looking at that structure. That's the structure that we're currently looking at. Okay, I'm going to switch everything off again because we're not looking at that. We're looking at the structure, what it is doing. All right, so this is what we have here. So we had this move down here. Now remember, this is that X that we're talking about. All of this is a correction. So we need to see where it's going to end. But within this correction, we find trades. See how I'm coming up with it from historical data to this now. So here, you get an impulsive move. You get an impulsive move to the upside. After that, you get a corrective structure, which is an expanding flat, like that. And then after the expanding flat, you get a clear move to the upside. We actually bought here because we saw this structure. So we'll be looking for this structure to perhaps go to this level, giving us a 1, 2, 3. So you see now we already know where we are in the direction. We are on the 4-hour chart, but we know what's happening historically. Okay, so if you don't know what's happening historically, you can trade this. So we are here. We are taking this trade. So we'll be looking for this to at least minimum come to this level, because these are the possibilities that could happen now. And now this, what you're seeing right now, is what I do on the weekly weekly analysis. Right. So here, the possibility is that you could get something like this. What will that do? That will give possibly another correction like that, giving you 3 waves here, which we can label like not like that. That's 1, 2, 3 W, 1, 2, 3 X, 1, 2, 3 Y. So this structure can do something like this. Can be a longer term structure, can be sideways for quite some time before it actually we get that move that we're looking for. And this is the move that we're looking for. The move that we're looking for is to the downside before we go up. Actually, there's a bit of an error there because this red is correcting this swing here. So you should end up with a move, with a yellow move. My mistake there. You should end up with a yellow move like that. So that will complete that will complete that move. So you've got a yellow, you've got all of this sideways correction, complex correction within the yellow. So essentially this is only just a ABC, as you can see. So what do we anticipate from there? Then we'll anticipate the big move to the downside. But you can see that we're focusing far ahead. Right now what we're doing is just to go with it. We're trading this pulsing move up. If it corrects, we're trading it up. Then we know when it gets to this level, we're coming down. Until we get a move to the downside, until we get confirmation for downside, then we're taking that trade to the downside before we get the 2,000 pips to the upside. Okay, so that's how we'll be trading this one. So let me show you the trade that we took on this one 2 years ago. See if we can find it quickly. I hope we have not ran too far in terms of time here. I think we left with about 2 minutes, so we can show that one quickly. All right, so 2 years ago, this was posted on TradingView. You can go to my profile and check it. I can find it now. See that this analysis works from any time frame, but obviously, even if it was 2 years ago, this is a 4-hour time frame. So what you see here is this pattern here where we had it W, X, Y. So this was that 2 years ago when I was looking at, this was that diagonal that I was looking at. It was before it completed this wave 5. It actually changed the structure when it went down. Okay, so you can see I was analyzing before it completed, so I was still looking at it as a double XY. But when it completed and we were going to wave 5, it was clear that it was an ending diagonal. So this is why we wanted to get this wave 5 before we get this move to the upside. So now let's play this. Check the date, December 11, 2016. I'm going to play this now. We pulsing move to the downside. We wanted it to come down a little bit more. You see here, it came down a little bit more. and then we started reversing, and then exactly on the target we got 2,000 pips. If you go measure this, it's exactly 2,000 pips to this level. Okay, 2,000 pips. So then what happens when it gets to this level? We take profit, okay, and then it starts doing this and it starts doing this. We can already see this is a correction, but it's incomplete. So we want this correction obviously to be like this before we get another move up like that. Right, see what the structure presents to us when we understand what's going on in the cycle. We play it again. See now, that correction actually completes. So what happens now? We've got this clear regular flat, right? So this is the current swing that we've been trading, that we were talking about. Okay, so here it is, here. So this is the swing that we're currently in. So this last piece here is what we are currently trading, the one that is going to the upside. So what will we be looking for? We've got a pulsing move, we've got a correction. What are we looking for? We are looking for this pulsing move again. We got the 2,000 pips, we were looking for another 2,000 pips. But here we're anticipating a bigger correction before we go. Similar to what we got here. You see here we also got a bigger correction here before we completed the move. It did not go in a straight line. It went, corrected, and then it went. So similarly here, let me show you what I mean. It went, corrected, and then it went. Here it went, so we will not be surprised when we get a deeper correction before it goes. So 2,000 pips we got. We also got this move to the downside. We didn't get this one because we just got out of the trade. But when it gave us the correction like that, we got this big move, and this was about 800 pips as well. So this is how you trade A, B, C. It's as simple as A, B, C. Thank you very much for watching. I hope you enjoyed the webinar. All right, so my contact details will be out at the end of the video on the outro. You can contact me there for training inquiries or any other inquiries that you may want to know regarding our trading strategy. Thank you very much and have a good night. Cheers, bye-bye.